These are the headlines. Manhattan new rentals plunge 71% as coronavirus freezes the market, CNBC. New York City rent hit record highs. New leases plunge as April market sees dramatic shifts. Brick underground. Rental activity hit record lows in Manhattan and Queens, the real deal. Again, these are the headlines. I think it's safe to say everyone is talking about the New York City rental market right now. And I mean, when you want to talk about real estate in New York as an investor or a tenant, you must. There are about 5.4 million renters in the city, which is about two-thirds of the population. I'm Tom O'Byrne, award-winning real estate agent for Douglas Elliman Real Estate. I make videos on the New York City and Long Island real estate markets, so if you're looking to stay up to date, hit the subscribe button. If you like this video, hit the like button. And if you're like me and you like numbers because you feel they give you a clear picture of what's really going on, then this is the video for you. It's based on a new report from Jonathan Miller. I talk about him a lot because he's considered the end-all, be-all when it comes to New York City real estate appraisals. His company, Miller Samuel. And if you want a copy of this report, leave a comment down below and I'll get that to you. The vacancy rate in New York climbed to its highest level in 14 years. New leases for Manhattan apartments plunged 71% in April and vacancies soared as the rental market froze amid the coronavirus pandemic. And more residents left the city, according to Miller's report. The number of new leases fell to 1,407, the lowest total in a decade. The declines were the clearest sign yet in the rental market that Manhattan residents are leaving in the wake of the health pandemic. It's hit the city especially hard and sparked predictions of a mass flight to low-density suburbs. This is definitely something we're following. I posted a video about a New York City exodus to the suburbs a few days ago, another video on its impact on the Hamptons rental market for the summer. I'll put a link to those in the description. Brokers say landlords have already started making concessions in hopes of keeping tenants. Concessions are from landlords to entice renters to sign things like reduced security deposits to a free month's rent. They've been disappearing over the years, but right now it looks like they're coming back. One landlord in downtown Manhattan is even throwing in a free Peloton in hopes of appealing to health enthusiast renters. I mean, I just subscribed to an online gym, so it sounds pretty good to me. But the low end of the rental market could be hit the hardest because people in service jobs and the gig economy have experienced the largest job cuts. I read recently that about 40% of those who lost their jobs after March made less than $40,000 a year. So the low-end rental market is definitely in for a hit. But I think this is a generalization that doesn't totally understand the gig economy and the potential for income. This isn't going to just hurt low-end markets. I've had some clients who make close to 5 figures per month working as rideshare drivers. So what you might think of income in terms of income as it relates to the gig economy may need to expand to really predict what's coming next for the rental market. But it's true, high-end rentals are definitely in for it, defined as the top 10% of the market, often more resilient in times of uncertainty. Luxury rentals are mirroring the overall market. New big-ticket rentals saw a 71% decline in April compared to 2019, with new leases signed on just 142 properties. So we talked about new leases being down in Manhattan. Let's head over to the bridge. Was it better in Queens or Brooklyn? It had to be, right? No, it wasn't better in Queens or Brooklyn. In Queens, just 100 renters signed new leases last month, a drop of 64.9% from last year, and the most significant percentage fall logged in more than 7 years. 100 new leases is just unheard of, but some of those deals were mine, just saying. Brooklyn recorded just 439 new leases in April, an annual drop of 66.8%. The market is at an absolute standstill right now, and yet, despite a deadly pandemic, raging turmoil in the financial markets, and staggering job losses, data is showing prices are going up. People reached out to me at the beginning wondering if there were any deals, thinking this could be a good time to save money, but the data is showing rental prices have never been higher. So you might be asking yourself, how could that be? What's going on? Is it true? The answer is that the data is only telling half the story, and this is basically what Jonathan Miller said, and he's the one who writes the report. Here's what is true. Remember, I said this is a video for people like me who like numbers. In Manhattan, rental prices rose 4.9% to $36.50. Median prices at the top end rose 5.5% to $86.50. Let's cross over that bridge again. Did prices drop in Brooklyn and Queens? No, prices did not drop in Brooklyn and Queens. Median monthly rents in Brooklyn jumped 14.4% last month to $32.59, a record high for the borough. Median prices, meanwhile, in Queens hit $29.70, up 4.2% from last year. In fact, in April, the average rental prices reached record highs in Manhattan, Brooklyn, northwestern Queens. But it's only telling half the story. Jonathan Miller, the expert appraiser, said the data is, quote, misleading. Miller, in fact, believes that rents are actually falling amid the pandemic. The problem, he says, the report is only able to look at newly signed leases, which represents just a third of the market. With the state's stay-at-home orders in place, renters unable to view many potential apartments in person, and people's concern of job loss, more tenants are choosing to renew their leases and ride out the pandemic in place. It didn't include lease renewals, where existing tenants often have more leeway to negotiate down monthly rents, and this is where all the action's happening. Landlords and tenants are negotiating rent reductions and rent deferrals, pushing the rent payment down the road because of job losses, wage cuts, recent furloughs. So that data is not getting reported to brokers, and it's virtually impossible to track. So even with concessions like free rent and pelotons, this explains, or pelotons, how do you say it? That explains why the number of tenants signing new leases to move to new homes plummeted about 71% in Manhattan, 67% in Brooklyn, and roughly 65% in Queens. He said price cuts are more likely to show up in future reports as the lower prices feed through to new rentals, and he says we'll see weaker prices down the road. The people signing new leases, those signing right now, typically have the money to move to the city from elsewhere during the crisis, and since they're often wealthier, they can afford those higher rents. I think we might also see some people be upgrading their apartments because I know outdoor space is in high demand right now. But Miller expects that New York City's rental market will return to some semblance of normalcy once the city begins to open. But when it does, rents could be noticeably lower and concessions could become more widespread. This is a complete reversal of predictions made just 6 months ago. So all of this explains why new lease signings are falling and on paper prices are rising, kind of going against the normal line of logic when it comes to supply and demand. But most likely prices are staying the same or getting a little lower in the renewal side of transactions. We just can't track it yet. So thanks so much for watching. I'm Tom O'Byrne with Douglas Elliman Real Estate. I'm an agent and I make videos discussing the New York City and Long Island real estate markets. To stay up to date, hit subscribe. If you like the video, hit like. Thanks again for watching. Have a great day.